Hi everybody, and welcome back to Multifamily Minute. I am Amber with Golden Ratio Capital Group, and this is part 4 of this series on simplifying passive investive in multifamily real estate. Woo, that's a mouthful. But this section is a hard asset. Now I feel like in some circles I could just drop the mic and walk out of the room and feel pretty good about saying this is a hard asset. But I want to decode what this means for you as an investor. Like, so what? This is a hard asset. What does that mean for me? So let's talk about it. Let's get into it, as I like to say. Investing in apartments is investing in a physical, tangible asset. This asset provides shelter, workspace, and essential structure regardless of currency valuations or market sentiment. So that was a mouthful. Let's unpack that little bundle of benefits. So investing in apartments is investing in a physical, tangible asset that provides for one of the essential human needs, the need for shelter. And I know this is the second time I've said this, but I'm very excited about investing in multifamily real estate. But this is another one of my favorite reasons for investing in multifamily real estate. We get to provide safe, clean, and affordable housing to large numbers of people. And this isn't just lip service. It is truly the cornerstone of what makes an apartment successful, is that we uplift that whole community. We're coming in, we're putting on paint, we're upgrading units, we're increasing amenities and services. So it does really add an extra layer of feely-goodness to this type of investing. And it's, again, the cornerstone of what we're doing is serving our communities via housing. And on top of that feel-good deliciousness, the need for rental housing continues to grow as the affordability gap widens. So I want to take a quick moment to talk about what the affordability gap is and give you an example of that. So the affordability gap is the space between what it costs to rent and what it costs to buy. So for example, here in Austin, Texas, where I live, the median home price is $550,000. If you were to go out and get a mortgage, let's say you were lucky enough to get a mortgage at 6% and include the taxes and the insurance on that, so you've got PITI covered here, that mortgage is going to cost you about $4,000 a month. Now, the median rental income in the Austin MSA is $1,600. So that's a huge gap that most people are not going to be able to shoot. And the thing is, that gap continues to widen. And while it's not an ideal world, it does provide solid metrics for investing in this type of asset. There's a little bit of interpretation in that $1,600 for the rent, because that does include smaller studio 1 and 2 bedroom apartments, as well as 3 and 4 bedroom apartments, but that tends to skew that number down just a little bit. But yeah, it does provide solid metrics because the need for this type of housing just continues to keep getting bigger. Now lastly, I want to briefly mention about having a hard asset, and again, especially one that provides for basic human needs, how this can hedge against inflation. So here's the definition of inflation: a general increase in prices and fall in the purchasing value of money. So here's the inflation basics. When you have inflation, so the cost of goods and services rises. Everything from milk to gas to housing increases. So that means the dollar is valued less. It takes more dollars to buy that same amount of gas or that same carton of milk or that same unit of housing. So your money doesn't go as far. But if you are invested in one of these assets, that's a hard asset, like an apartment, and the cost goes up on that, you can increase the rent to move along with inflation. So you're not falling behind inflation, and you're able to participate in those gains that occur when the cost of that product, your housing unit, rises. So guys, the rich are doing this to hedge against inflation, and I think we should join them. I think they might be lonely there. So anyway, super excited about that, and excited to wrap up this series with the next segment, which will be talking about leverage and passive multifamily real estate investing. So excited to see you there.